Welcome back to Investing Talk Podcast. Today we're tackling a question that seems to be on a lot of minds. Is GLD SPDR Gold Trust a good time to buy right now? We're going to take a really close look at this popular gold-backed fund, sort of pull back the curtain on its projected performance, what's expected to drive the price, its unique structure, and what you really need to consider if you're thinking about adding gold to your portfolio. We've got a stack of research here to guide us.
That's right. And understanding GLD isn't just about the gold price itself today. It really involves digging into macro policy shifts, market sentiment, the fund's specific operational details, and even, some speculative whispers that could potentially move the needle.
Definitely. Before we jump into all those fascinating details, though, if you find value in our discussions, please do hit that subscribe button. Maybe give us a like and leave a comment. And hey, if there's a specific company or investment you'd like us to explore in the future, just let us know down in the comments below. Okay, let's unpack this. Looking ahead, based on the projections and analyses we've seen, gold, and by extension GOD, looks like it might be in for quite a ride. What's anticipated to drive the action, maybe starting with the outlook for, say, September 2025?
Well, the analyses we've reviewed suggest September could potentially see gold prices push above $3,500 an ounce, hitting new highs. And this isn't just plucked out of thin air. A big factor cited is the September effect.
Ah, yes, the old September effect.
Exactly. It's that historical pattern, right? Where the S&P 500 often dips, and volatility may be measured by the VIX tends to spike up, perhaps around 16.6 in this projected scenario. And when traditional markets get choppy like that, well, investors naturally look for safety, and gold is often, top of the list.
It's always an interesting one, that September effect, almost like a self-fulfilling prophecy sometimes. But beyond just seasonal trends, what else are the projections pointing to for such a strong gold push?
A huge catalyst, highlighted again and again in the sources, is this growing anticipation of a Federal Reserve rate cut.
Right. The Fed pivot.
Precisely. When rates are expected to fall, holding something like gold, which doesn't pay interest, becomes relatively more attractive. The opportunity cost drops. So easier monetary policy tends to bolster gold's appeal, especially as an inflation hedge, and that drives inflows into funds like GLD. Then you add in the ongoing geopolitical uncertainty, Eastern Europe, the Middle East, that creates this potent mix.
Yeah, that uncertainty really fuels the safe haven demand.
Absolutely. It ramps up demand significantly, pushes ETF inflows, and signals a clear shift toward what analysts call risk-off positioning.
So it sounds like a confluence of factors, maybe some market jitters, the Fed potentially easing, global tensions. Gold really is that sort of break glass in case of emergency asset, isn't it?
It really is. When things feel uncertain, people reach for something tangible, something historically reliable.
Makes total sense.
And what's fascinating is how these big macro events, rate expectations, global instability, even those seasonal patterns, how they directly translate into investor actions, into capital flowing into physical gold and funds like GLD. It just underscores gold's role as this multifaceted asset responding to a whole range of signals.
And looking back slightly at the projections for August 2025, that seemed to set the stage right. What were the indicators then?
Yeah, the run-up is interesting. For August, the analysis suggested GLD holdings could surge quite a bit, maybe reaching 977.68 tons. Now, that would be a pretty hefty 12% increase year-to-date, the highest level seen since August 2022, actually.
Wow, 12% is significant.
It is, and it's not just retail investors. It points to serious institutional and, importantly, central bank participation. When you see central banks and the big funds increasing their gold stashes, especially when bond yields might also be rising, it suggests something more fundamental.
Like a strategic shift.
Exactly. A reevaluation of gold as a core reserve asset, not just a fleeting hedge. That's a powerful underlying signal beyond just day-to-day market noise.
That's a great point. Retail flows are one thing, but central banks moving in is a different ballgame.
Yeah.
What did the analysis say about investor behavior then, especially if bond yields were maybe creating some volatility?
Well, even with rising bond yields potentially stirring things up in other markets during that projected August period, it apparently didn't stop the gold buying. Investors were clearly using gold for diversification, seeking some kind of refuge from rate uncertainty, yield volatility, and this central bank accumulation theme is key. The projections showed foreign central banks actively choosing to up their gold reserves, maybe favoring bullion over, say, U.S. Treasuries. That's not just speculation. It's potentially a fundamental shift in reserve management. It provides this really strong underlying support for gold, almost regardless of short-term market swings.
Right, like building a more solid foundation under the gold price.
Precisely. And the groundwork for this projected rally, according to the analyses, seemed to start back in July 2025. What were the early whispers then? In July, the signs were already emerging, early indications of safe haven flows starting up. Renewed interest in GLD as inflation worries lingered, and policy uncertainty kept investors cautious. The models showed ETF inflows picking up even before Q3 earnings kicked off.
So the money was moving defensively early on.
Yeah. And that's when gold prices really started their projected steep climb. Supported by, sustained investor optimism in gold at least, and a clear move towards defensive allocations. Plus, all the speculation around Fed policy and the U.S. fiscal picture was already driving positioning in gold ETFs. It basically set the stage for the whole summer rally scenario.
Okay, so looking across those three projected months, July, August, September, there's a consistent story building. Inflation fears, geopolitical risk, Fed expectations, all pointing towards gold.
It's not just one thing.
No, it's a powerful combination driving demand. And it makes GLD a really interesting barometer for broader market anxiety and hedging activity. But that consistent narrative, while compelling for gold itself, brings us to the investment vehicle.
Yep.
Understanding GLD itself is critical, right? So let's shift gears and talk about the nuts and bolts of GLD, how it works, and what listeners really need to know if they're considering it now.
Absolutely crucial. So GLD is structured as a grantor trust. What that means in plain English is it directly holds physical gold bars for its shareholders.
Okay, physical gold, not futures or anything complicated.
Exactly. Actual allocated gold bars sitting in HSBC's vault over in London. That structure provides direct physical backing, which is a big deal for investors who want pure gold exposure.
So owning GLD shares is almost like owning a tiny fraction of those bars in the vault.
Yeah.
That transparency is a plus.
It is. It's fully backed by allocated gold. They don't lend it out. They don't use derivatives.
So it's about as direct as you can get to physical gold in an ETF wrapper. Tracking the spot price. Specifically, the LBMA gold price PM. Can you quickly unpack what that is?
Sure. The LBMA gold price PM is basically the benchmark price set by the London Bullion Market Association each afternoon. It's kind of the globally recognized standard for valuing physical gold in the wholesale market. So GLD just aims to track that specific real-time value. No complex index tracking or anything. That simplicity is definitely part of its appeal.
Very clear. But, like anything, there are trade-offs with that simplicity and direct exposure. What are some key things people should be weighing up with GLD right now?
You hit the nail on the head. While GLD offers fantastic liquidity, transparency, and that simple access to gold, making it great for short-term tactical plays and, viable for long-term strategic holdings, too, you absolutely have to look at its 0.40% net expense ratio.
40 basis points.
Yeah, and you need to weigh that against some lower-cost options, like the iShares Gold Trust is at 0.25%, or the SPDR Gold Mini Shares is even lower at 0.10%.
Those basis points can make a real difference over the long haul.
They really add up. Which leads to a really important question for anyone considering gold. Why are you buying it? Are you looking for a short-term volatility hedge, a long-term inflation shield, or just diversification? Your specific goal heavily impacts whether GLD, with its particular features, is the right fit.
And one of those features you mentioned is the collectibles tax treatment. That sounds like something easily missed. Can you explain that, especially for U.S. investors?
Oh, absolutely. This is a big one, particularly for buy and hold investors. Unlike most stocks or regular ETFs, which usually get preferential long-term capital gains tax rates, the IRS treats GLD like a collectible because it holds physical gold. Think rare coins, stamps, art.
Okay. So what does that mean for taxes?
It means your long-term gains on GLD shares could be taxed at up to 28% in the U.S. That's potentially much higher than the standard long-term cap gains rate for other investments.
Wow, 28%. That could take a serious bite out of returns.
It absolutely can, especially over many years. And since GLD doesn't pay out dividends or capital gains, all returns are just in the share price. You only face that tax when you actually sell your shares. But it's critical to factor in.
Definitely a crucial distinction for long-term planning. And what about the concentration risk you touched on?
Right. Simple point, but important. GLD is 100% concentrated in one thing, physical gold. Now, gold itself can be a diversifier within a broader portfolio. But if you're looking for exposure across different precious metals, silver, platinum, palladium, GLD doesn't give you that. You'd need other investments.
So it's a pure gold play, which might be exactly what some people want.
Precisely. But you need to be aware your performance is solely tied to gold's ups and downs.
Okay. And looking ahead again, the sources flag some major potential catalysts coming up. Not just background noise, but things expected to really drive the market. What are the big ones on the radar?
Well, that Fed rate decision on September 18th looms large, as we discussed, expected to be a major driver for gold and GLD flows. Then you've got Q3 earnings season kicking off. That often triggers portfolio adjustments across the board.
Right, sector rotations and all that.
Exactly. And GLD itself has its own Q3 rebalancing around October 20th that can sometimes cause short-term ripples. Plus, things like the U.S. holiday spending report in October anticipated big institutional buys in November. These are all dates or periods analysts are watching.
And beyond those scheduled events, I saw some chatter in the research about more speculative things, rumors almost.
Yeah, there are some interesting whispers. Talk about potential unscheduled central bank gold buying, especially maybe from large Asian or Middle Eastern banks.
Oh, unscheduled buying could be significant.
It could. If those rumors pan out, it could really boost global reserves and drive more flows into funds like GLD. There's also some industry buzz, maybe wishful thinking, maybe not, about a potential fee cut by GLD's sponsors.
To compete with those cheaper alternatives we mentioned.
Exactly, that 0.4% expense ratio. If they cut that, it could seriously change the competitive landscape and attract more assets, especially for those long-term strategic investors where fees really matter. And even whispers about a potential tie-up with a crypto platform to broaden access somehow, though that seems more speculative.
Interesting possibilities.
Yeah, so it seems like gold and GLD are likely to stay right in the spotlight for defensive strategies. Probably means continued elevated volatility, too.
Okay, this is where it gets really fascinating for me. Gold. It's been this store of value for literally millennia. It's adapted through countless economic shifts, political upheavals. Now we're in this age of digital finance, crypto, shifting global power, persistent inflation worries. What enduring role do you see this ancient asset playing for the modern investor? Beyond just being a hedge, what stands out to you as gold's most compelling characteristic looking forward? And how might that shape how you'd approach something like GLD? Well, that brings us near the end of our time today. Thank you for joining us on Investing Talk Podcast. We really hope this exploration of GLD, SPDR Gold Trust, drawing on all that research, has given you a clearer picture and maybe some valuable insights for your own investment thinking. We'll be back soon with another look into the world of investing. Until next time, keep learning and keep investing wisely.